Hello, everybody. My name is Adam Bergman, and this, of course, is Adam Bergman's Money Makers. Thank you so much for tuning in. Today, I want to talk a little bit about my favorite stock, Palantir. About a month ago, ARK Invest sold all of their shares of Palantir. I know it's been a month, but a couple of days ago, we got some insight as to why they actually sold their shares. If you guys don't know what ARK Invest is an ETF, which is an exchange traded fund. Basically, there's a fund manager, CATHIE Wood, who's the lead fund manager, and she buys, sells, and trades on your behalf. And I believe they collect like a 0.75% fee. All of her ARK Invest ETFs, she has 5 main ones. All of them had Palantir in them at one point or another. It was only the second stock out of her entire portfolio, and she manages a multi-billion-dollar portfolio that was in all 5 of her ETFs. Well, she always believes in something called a 5-year time horizon, right? She believes in a technology will catch up to the world, or the world will catch up to technology, and that's really when the stock is going to blow up. So it's okay if you incur losses on the way, as long as you get to that final point. So it was a bit of a shock that she sold Palantir. Palantir was a top 10 holding for her, and everybody was like, what the heck's going on? Now, during the pandemic in 2020, ARK Invest was the number one, I believe, in like the number 4 performing ETFs out of the 5. It was like she was the best. Nobody questioned her. She famously predicted what was going to happen with Tesla when nobody believed her. And she was right. So she invests in all these technologies that are not really making money now and going to make money in the future, or will change the world in the future. So everyone was shocked when she said that she sold. Now, Meet Kevin did an interview with a representative from ARK Invest, and they reiterated why they sold it. It didn't really make sense, and this was the first time. Right now, I'm going to play you guys a clip. ARK Invest does their ARK Innovation presentation. They do presentations talking about like the industry, what's going on, so on and so forth. And they were literally asked the question, and this question was answered in around 3 minutes. And I wanted to play this for you, and then I wanted to give you guys some of my insights and some of my thoughts as to what I believe. But before we get into that, I wanted to say something very carefully. I respect CATHIE Wood tremendously. I think she's amazing. I think she's been having a really bad last year. I think she's under tremendous pressure to perform because her funds are doing really bad. With that said, never listen to anybody. Definitely do your own research, including myself, including a fund manager. It could even be, Berkshire Hathaway, Warren Buffett, and Charlie Munger, the best investors of our time. Never listen to anybody. Always make your own decisions. All these videos, all these presentations, everything that's said, you gotta understand these are only guidance. It only shows you a little bit, a little light and of what is exactly happening. So you definitely need to see the entire picture. You can't take anybody's word for it. And definitely, I urge you, please do your own research, because at the end of the day, nobody's going to be more responsible for your money than yourself. Let's listen to the clip, and then I'm going to give you some comments after that. This is a webinar from March 22nd.
The first question is for the Next Generation Internet team. William, could you please provide some comments on ARK's thesis for Palantir?
Yeah, thank you, Dan. I'll start off by saying broadly we're in a period of consolidation where we concentrate towards our higher conviction names and in these types of environments. And as we looked at the portfolio and Palantir in particular, we've been concerned about the deceleration in the revenue growth of the government business. So Palantir has really 2 separate business lines. They have a commercial business line that sells to large companies and increasingly smaller companies. And they have the government business line, which historically has been a larger part of the revenue. And that's really where they grew up as a company, providing services and technology to the Department of Defense, to the intelligence community, to various government agencies for the U.S. and across the world. And lately, we've seen a deceleration in the growth of that business. And it became very apparent in the last earnings call how abrupt that deceleration has become. And as we dug into the space more and learned more about government procurement processes, one of the things we found is that there's a lot more competition within the government now. And so when Palantir started, they were able to win what are called sole source contracts, meaning they were the only company, the only provider that had a very specific capability. And because of that, they didn't really face competition in winning contracts. And that allowed them to get more contracts. It allowed them to get contracts with less effort without going through a complicated procurement process. And what we found is that there are now others. In many cases, it's smaller companies, or it's a coalition of smaller companies with larger consulting companies who have partnered up and are now providing sort of competitive capabilities within the government. And that's challenging because it means it's harder for Palantir to win sole source contracts. In many cases, they have to go through a full procurement process, a bake-off essentially between Palantir and other competitors. And we found that in some cases, other competitors are winning contracts over Palantir. And so, as a result, we think that could be a significant headwind within the growth of the government business. And for that reason, our conviction has decreased in Palantir.
So there's a lot of things that are said and a lot of things that were omitted. And I just wanted to clarify a few things. The very, very first thing that I wanted to show you is the total revenue growth was 34%. At the end of the day, bottom line, no matter what anybody says, we grew by 34%, beating our estimates of 30%, which means we beat by over 10% the projected growth without gaining a single new government contract. That is true. We did not gain any new government contracts. However, we still beat and demolished our growth projections. Now let's go concentrate on the actual numbers of government contracts. Government contracts in Q1 was 76%, then 66%, then 34%, and now it's 26%. So his beef is we didn't grow any new government contracts in Q4. However, our net dollar retention is 146%. What does that mean? That means without gaining any new clients, we are maximizing how much we are getting out of every single client, which means how much can you squeeze the lemon to get the lemon juice from each lemon. We increase the squeeze, so to speak. So the existing clients that we do have are getting us more money, are giving us more revenue. So although we did not grow that sector of our company, we did increase our revenue from that same sector. I wanted to point that out. I also want to point out the whole beef with Palantir is that they were never growing the commercial side. The commercial side is lagging. The whole time everyone's like, oh, all you have is government. Now, check out commercial. Our total commercial business grew by 200%. Our U.S. commercial business grew by 371% from 17 to 80. So this gentleman is concerned that we're not growing our government business. However, we are demolishing our commercial business. However, this happened in the beginning of this year. A lot of government contract spending is going to end up happening in Q2 of this year. There's a little bit of a delay in government spending. That could be a reason why there was no government spending. Also, it's possible due to the pandemic due to the pandemic ending, there was no increased spending due to the pandemic, right? Because everything changed. However, I think they made a huge mistake because when they sold, the stock is up over 30% for the last month since they sold. Now, of course, nobody knows what's going to happen. Nobody can predict if anything's going to go up or anything's going to go down. However, the whole thesis of ARK is to buy into the long run. Don't worry about the short term. Nothing really changed. The whole basis that we didn't grow our government side is a little faulty because we did increase revenue from government side. We might not have added any contracts, but we did increase revenue. And the whole beef was the real money is from the commercial side. And we absolutely demolished the commercial side. But all that has no bearing. At the end of the day, we did beat revenue at 34% with an estimated of 30%. So do I agree with ARK Invest? No, I don't agree with ARK Invest. 100%. I don't agree with them based on what they said. I think it's a cop-out. I think they were feeling it. I think their numbers were doing really, really bad, and they needed to gain some liquidity, so they ended up selling some stocks to gain some liquidity. I also think a month later, they are super duper tight, and I do think that they will be buying back into Palantir. When? I don't know. Probably I see them buying around the $15 mark after they get their realized gains. So when you buy and then you sell at a loss, You want to realize those losses in something called tax loss harvesting. So you have to wait 1 month and 1 day in order to repurchase what you sold in order to reap the benefits of the sell, of the realized losses. Guys, that's all I got for today. All I wanted to tell you is one more time, don't ever listen to anybody, including myself. Always dig deep and try to understand what is going on behind closed doors. I think it's really, really important for my subs to understand this. I think it's really, really important to break things like this down. That's all I got. Thank you. Have a great night.